Now, on to today's market movers as pro traders break down their futures and options trades at CME Group.
CME Group is launching Micro E-mini futures contracts. Discover how a smaller Micro E-mini futures contract opens the world to greater trading possibilities.
Welcome to Market Movers. I'm Jim Iuorio with Scott Martin.
Hi, Jim.
Okay, so we are a week away from the April 30th, May 1st FOMC meeting. The market, the FedWatch, CME FedWatch tool says 98% chance they do nothing. The market thinks they do nothing. Do you agree?
So you're telling me there's a chance, Jim? Yes, I do agree. And it's just basically because I think it's more about the market getting the message from Powell. And what is that going to be? Is it going to be data dependency, patience, things that the market seems to have liked so far?
And I agree with you, and I believe it is going to be those things. Now, the FedWatch tool also says the next move is going to be an ease. Why in the world would the Fed be easing? Is it going to be global reasons? Is it going to be China, Europe, earnings?
It could be the first three things for sure. Earnings have been pretty good so far, actually, nicely surprising. But I'll tell you what else it could be, Jim, too, is the yield curve. I mean, look all across the yield curve, and we're seeing rates fall, which maybe means that the Fed has some room to ease later this year.
It's a tail wagging the dog kind of thing. I like that. Before we dive into our trade discussion, I'd like to point out that these trades are examples, not recommendations or advice. When we price these out, the June 10-year is trading about 123.16. Scott?
Yeah, looking at just the 10-year today, Jim, and looking at how things are kind of positioned and how we've seen kind of yields fall, the treasuries rally, and what kind of is out there, in my opinion, is kind of an interesting example today, which is specifically buying the week 1 May 124 half, 125 call spread for 2 ticks. This trade expires May 3rd. It risks 31.25 to make potential 468.75. The underlying on the ZN is about 123.16. The reason that I like this exposure, Jim, is because I do believe that rates are going to continue to fall. If you look at the chart and the yield curve, especially if you look at the chart on the 10-year specifically, you'll see that in this exposure that I have here, we almost have a rally up to, say, those old highs where I think the market probably is going to find some footing. So therefore, I like this call spread as far as exposure.
I actually like it a lot, and I have one that's similar to it that I have on that I'm going to talk about in a second. But you think prices are going higher, yields are going lower. But that's not a function of the Fed. You think that's more a function of things that are going on in the globe?
I do, and I also think it's a function of the fact that there's still no inflation out there no matter what the Fed has done, and therefore yields can fall.
One of the reasons I put this trade in, because I don't know if you noticed, the euro's been cratering the last few days, so to me it's an indication that something might be wrong in Europe. So I actually did buy, this is an example, but I do have it on, the week 1, 124 and a half call spread. I bought it for 6 ticks. Also expires May 3rd, risks $93 to make 406. So this is similar
exposure,
to yours,
just a little bit lower.
It's lower. Mine's a half a point away, the low strike. Yours is a full point away.
And you can tell from my pricing that the market doesn't believe that that mine is maybe more possible, right? It's very less possible. But this is one of those exposures that if you do choose to put it on, maybe you just manage it into expiration as we talk about.
When you and I are both on the same page, it scares me a little bit here.
I get scared a lot.
Let's change the channel for 1 second. We've got 2 weeks till the CME launches the micro contracts on their 4 different indexes. Big deal, little deal, no deal.
Huge deal, Jim, because this is
a
great way to use some versatility with the micros. If you're just maybe looking to wade your way into an exposure here, I think the micros do that for you.
Yeah, and I like it. I like the precision of it and the flexibility, particularly for us who trade a lot of options. And when deltas change more so than you might have wanted to, I plan on using the micros to alter that exposure.
I agree, and it's great hedge exposure as well.
Okay, thank you for joining us on Market Movers. I'm Jim Iuorio, where we are helping to make you a better trader.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.